Okay, the stock which is on our radar is Godrej Consumer, GCPL. The company has announced that they will be buying 100% stake in South African company Frika Hair. Vivek Gambhir, the managing director of the company, now joins us on the phone line. Afternoon, Mr. Gambhir, and thanks so much for joining in. And you've started the new year with a big bang and acquisition. Can you tell us how much GCPL has paid for acquiring Frika Hair?
This is unfortunately our agreement with the sellers does not allow us to divulge the exact amount that we've paid, but it's a very accretive acquisition, and it will be a very good addition to our portfolio of hair extensions in South Africa.
So EPS accretive from year one itself?
That's right.
Okay. Mr. Gambhir, can you just tell us how much the total acquisition will add to your overall sales in the company for, say, FY15, FY16, FY15 in case the deal is closed by then?
It's a niche acquisition, so the overall impact will be less than 1% of total GCPL revenues. However, our annualized run rate in Africa is about 1,200 crores. And this acquisition's size is about 40-45 crores. So for our Africa business, it'll actually be a nice addition. But in the overall scheme of things, it's a niche acquisition.
So what is your overall plan for the African continent, considering that you're generating around $200 million in terms of annualized revenues from there at this point?
We remain very excited by the tremendous potential of the African market. And this is an important step for us to continue building scale in the African market. Our current focus has been on consolidating our presence in our core hair extensions portfolio, but we have also launched home insecticides in Nigeria, and we will also be entering into wet hair products across the African markets as well.
Okay. Mr. Gambhir, hair extensions is a fairly niche segment. Can you tell us what is the total market opportunity, in Africa for hair extensions, and where would Frika range? Would it be the #1 brand over there, or in terms of size, or #2?
So across sub-Saharan Africa, the hair extensions market is about $1.5 billion US dollars. It's a very sizable market, and Darling is the clear market leader across most of the African countries. Frika's presence is only in South Africa, and within South Africa, it has a share in the high single digits.
What are the other niche acquisitions that you would look at going forward? In other emerging economies besides Africa, your strategy which you've outlined?
We are very open to looking at acquisitions. Clearly, our #1 priority for acquisitions would be in India. But beyond India, we are very open to acquisitions in both Indonesia and in sub-Saharan Africa. As long as the acquisitions make strategic, operational, and financial sense, we are very open to building further scale in our core geographies.
Okay. The company in its press release has, indicated that this move is in line with GCPL's global 3x3 strategy, targeting strong regional assets in emerging world. What is this 3x3 strategy, and by the end of it, what is it that you would like, the financials of, GCPL to look like?
Roughly, our current financials are about 50% of our revenues come from India, and the remaining half come from outside India. Our belief is that we will try and keep to that same mix of revenues. And with 3x3, our focus is on looking to expand our portfolio in emerging markets in Africa, Asia, and Latin America in our 3 core categories: home care, hair care, and personal care.
Okay. Mr. Gambhir, I just wanted to move away from the acquisition that's announced and wanted to ask you about the benefit that Godrej Consumer could possibly see from lower crude prices. Can you give us a sense in terms of how and if that would benefit you?
At an overall level, we are definitely witnessing an uptick in sales over the last couple of months. And so we are confident that the good sales traction will result in the second half of fiscal year 2015 being better than the first half of the year. We do expect volume growth to be healthier. though price-led growth could be a bit challenging given the benign commodity price environment as you were mentioning. And typically also, whenever commodity prices are benign, we do see increased promotional activity, particularly on the part of the regional players. And so I do expect our promotional investments to go up. But having said that, I think net-net, we will definitely see a good balance of better sales growth and reasonable profit improvement.
Okay. But what is, the company's strategy with respect to benign input prices? That's going to act as a significant margin tailwind even in FY16, it appears. So has the company decided to let all those benefits reflect in the company's margins, or will you look to pass on at least 50% of those by way of promotions, discounts, or maybe even up the A&P expenses? Walk us through, if you get a 100 rupee benefit on the back of decline in commodity prices, what will you all do with it?
See, a certain percentage will definitely flow down to the bottom line. So net profit growth will be stronger. Having said that, I think clearly you will see increased promotional activity, so we will pass on more promotional benefits to the consumers. I think this is also the right time for us to further accelerate our innovation agenda. So you will see a lot more new launches from us coming next year, and that will also consume more advertising and publicity expenses. But having said that, in spite of increased A&P expenses and promotional activity, you will see better profit growth next year.
Okay. Last question then, Mr. Gambhir. When you talk about better volumes at this point in time, what is the volume range that you're seeing as compared to earlier estimates or what you were clocking earlier?
I think from an industry point of view, we are expecting that the overall FMCG industry should be able to get volume growth in the high single digits, or with a little bit of luck, we could even see low double-digit volume growth for the industry. And our hope would be, of course, to do better than the industry.
For the fiscal?
For the fiscal 15, yes.
Okay. You also indicated that right now you would look at an acquisition in India. That could be the preferred destination. Is something on the anvil in the next 3 or 6 months, or perhaps in FY16?
I would not want to comment on specifics at this stage.
Okay. All right, Mr. Gambhir, we'll have to leave it at that. Thanks so much for joining in. So that's a niche acquisition done by GCPL.
But Reema, it's interesting because we had Apollo Hospitals also, and when I was talking to the management, they also mentioned that specialty pharmaceuticals is the next way to go.